So it's kind of taking it back to, and what happens is when it's really high, it means that a lot of people are very bullish.
Mm-hmm.
Term bullish means that they are really excited about the prospects of this company's future. So they are buying a lot of the company shares, which is taking the price very high.
Um, so you said bullish on. So can you explain what being bullish and being okay? Explain what being bullish is. The opposite of that is being bearish. So or a bull market or a bear market. So what is that?
Yes. So it's essentially from like bull and bear market. So in a bull market, there's optimism, like the prices are rising and rising. You see a lot of increases, you see surge in the economy. There's a lot of capital going into all these high risk assets. In a bear market, there's pessimism, like prices are falling. What's happening is that market sentiment is that people expect that prices will go down. So
Mm-hmm.
they won't be participating, they won't be buying shares, and they will be selling as well. So when you say someone is bullish or the market is bullish, it means that there's excitement, there's optimism. When it's bearish, there's pessimism. Everyone is, not in a great mood about the stock market.
Okay. Awesome. So I think that is where we're talking about quite a few things: stock markets, stock exchange, stock investing, stock trading. Okay, stock investing versus stock trading. In the last episode, we said something about
Yes.
day traders losing. I mean, 90% of day traders being linked with a losing history. So stock trading, I would just, it is a personal preference, like not to trade
Yes.
stocks actively if you are not experienced or if you don't have the knowledge of, the asset class, and you'll say, oh, I feel it will go up, I feel it will go down, or and you sit by your computer all day. So I'm more of a fan of stock investing for the long term rather than stock trading. And if there's one last thing to touch
Yeah.
on in this episode, I think we've gone through all that I've written down. Apart from a key, I would say, stock market investing strategy, I wrote down dollar cost averaging.
Mhm.
So, Barry, do you want to tell us
Yeah.
what
DCA.
dollar cost averaging is? I think it's something that our listeners should consider, especially if you are just getting your feet wet in the stock market. So, dollar cost
Yeah,
averaging.
absolutely.
So,
So
Barry, to you.
I'll just I'll I would it's just basically investing regularly. So if you have, let's say, $1,000 to invest, instead of putting it all in at once at one given time, what you want to do, or what dollar cost averaging is, investing very small amounts at regular intervals over a period of time. And so one is fixed and is very consistent till you invest the entire $1,000. And why you want to do that is this: because the market is always moving. So you want to take advantage of different swings in prices. So let's say the price is high today, is low tomorrow. On average, your average entry will be better once you invest like over a period of time, small amounts over a period. So it could be $100, maybe 10 every month till the end of the year or something like that. That's just like an example, not exactly that way. So what happens is, if the price is 150 today, you buy 100 at 150. If it's 140 the
Right.
next month, you buy 100 at 140. So when you do your your average of your entry, you see that you've gotten you were in a long term will have gotten a better price entry on average for that stock, instead of just going all in at once at one given period of time.
Awesome. Brilliant. I think that you've touched on it all. And yeah, I said something. Did I say it in the last episode about me wanting to be a speaker now, speaking on personal finance and that? So in the first talk that I had this year,
Yes, I
I
remember.
I, I had this table where I did the monthly return of the S&P 500, and I just put it up now, and the S&P
Mm-hmm.
500 actually was in the negative for 3 out of 12 months. So what happens is that if you adopt this dollar cost averaging philosophy, I mean, and you invest, let's say, once every month, you get, exposure to, although you get exposed to the bad, but you are not that person that, let's say, you just came into $10,000 and you just invested in April when it went down 4%. Then, you are like one of the unlucky
Yes.
investors in that case. But if you invest gradually and periodically, you get to, ride the highs and, not get too negatively impacted by the lows. So that is what
Much of the lows.
dollar cost
Yeah.
averaging does for
So
you.
yeah, exactly. Yeah, it's essentially, helping you hedge against the risk that being said that you can't time the market. So
You
you
can't.
go gradually, periodically. Yeah.
Awesome. So we've
I
come to
think
the end
I
of
think this was a
episode
great
five
one.
of Chasing the Bag podcast with Buddy and B.
Yes.
We Thanks for listening. If you've
Yes.
listened this far, try to subscribe and follow us on YouTube, Instagram, where else? TikTok. Listen to us on
So
Spotify,
I think we're
Apple.
on Twitter too, but our Twitter is not active.
Yeah, Twitter is not active at the moment. See, so handling social media is a career I found.
It's a lot of
Handling social
work.
media is a career. But yeah, but Instagram, please send us a message on Instagram and be sure to, if you have a question, be sure to respond on the podcast. And yeah, we'll do that. So, Buddy, any final words from you?
Yes, just like we said, you don't, go into the market or invest based of anyone else's, decisions or sentiments. You do your own research and you always ensure that you dollar cost average. I think those are two key learnings from this episode. That if you take any two things away, DYOR and DCA, I think they will be helpful for any beginner who is trying to test the waters with investing in the stock market.
Awesome. Closing words from me. This just came to mind. Don't panic. If you put $100 in the stock market today, say, and it goes to $80 or goes to 90, don't panic. Don't
ten
worry.
dollars,
don't don't panic. Say, my money is going.
it will
Don't
come back
worry.
up.
Don't panic. All right. Thanks for listening, guys.